You're watching Mirror Live with me, Nivedna Prabhu. In fact, breaking news that we're tracking at this hour. India's Q3 GDP numbers are out, and the Q3 GDP growth at 4.4%, and the GDP growth slows for second straight quarter, and the Q3 GDP growth at 4.4% versus 6.3% in Q2. So India sees the 2022-23 GDP growth at 7%. For more on this, I'm joined in by my colleague Tamanna to break down those numbers for us. Tamanna, very good evening. What can you tell us about the key takeaways and most important aspect being the important figure is Q3? Can you talk to us more on that front as well?
So there has been a slowdown in growth in the third quarter of the Indian economy, which is between October to December. Let me put that in some perspective for you. In Q1, we grew at 13.5%. In Q2, it was 6.3%, and in Q3 it is 4.4%. So if you put that in a chart, you're actually going lower and lower. Now there are a few reasons for this. Some of them are purely statistical. The 13.5% growth we had in the first quarter was because of the base effect, because of pandemic, and that base effect, that means when you compare to a lower growth in the previous year, is sort of evening out. But having said that, what 4.4%, what that number actually means and is reflecting is slower than expected consumer demand, because October to December, the period for which this figure has come, is the time when people generally spend more in festival season. It also tells you that the impact of consistent rate hikes from the Reserve Bank of India to rein in inflation are beginning to act upon the propensity of people to spend, and there is now a lack of spending because of that, or a slowing down of demand. It's also reflecting the global factors where exports have been hit because of global recessionary fears, and that is now looking at what the Indian economy is facing. So we are looking at a period of a relative slowdown. Important to note, and also as you mentioned, that the year's target of growth is maintained at 7%, so that hasn't changed. You can see this either as a statistical sort of correction, or also, importantly, as a reflection of an economy that is beginning to slow down and reflecting global woes.
Tamanna, just a follow-up question. Are there, bigger challenges for the RBI or bigger worries for the Indian economy as well as you speak of these numbers going forward?
For the RBI, now the question will be that should they focus on taming in inflation by continuing to increase interest rates, or should they sort of push the brakes on that because growth is beginning to get hit? And that's an interesting question, because in the last minutes of the meeting, after the last Monetary Policy Committee of the RBI, usually after the meeting they release the minutes in public domain, there were at least two members of that committee who felt that it's time to pause and no longer continue to hike interest rates because it's beginning to impact growth. Now you have the data to back that theory. So for the RBI, the question is going to be, should I tame inflation or should I give a further push to growth? Now on the economy overall, even if we do grow at 7% in FY23, and of course FY24 will be a lower figure as the world is facing a recession, we'll still be better off than everyone else. And it's going to become a game of seeing India performing relatively better than everyone else. Is India performing as best as India can to our topmost capabilities? Perhaps not, but there are a lot of global factors in play which is going to impact us as well. In this kind of a world where the global economy is linked, we cannot escape what is happening in the world around us, and you're going to begin to see reflections of that. So when you say, is there a problem for us? Well, we're going to be relatively better off, but are we going to be unscathed with what's happening in the world? Possibly not.
All right, Tamanna, thank you very much for getting us those inputs on this breaking story and also breaking down those numbers and drawing things into perspective for our viewers as well. But for the moment, we leave it at that. Thank you very much once again. And shifting our focus to other news that we're